Hello guys, so today is Friday as usual and we can begin our live. So maybe I am some late, 3 minutes I guess. So thank you very much for coming, and as usual the subject of today is just a general subject. We try to see facts. It means questions and answers, and I will be here to answer your questions. So I will be just waiting for a few minutes so the guys come. It's usually a few minutes, like 4 or 5, and then we will see our guys coming. So as usual, this week, 2 days good, 3 days bad, and what I think is the market is still strong, although we have seen this correction, three days red, which are what we call the correction, but it's next week that will decide if the market continues to go strong or to go down. So anything can happen in the market. So understand. Hello, Aura Pronovis. I haven't seen you for a long time, man. Where have you been? You know, all the guys here, I know them only by their YouTube ID, so I don't know names. Only at the exception of 2 that I know their names, but they change their ID always. So hope you are doing very well. So as I said, if we take the market, it's from 26 December, and the market is so strong. Now this week, as I told you, 2 days good, 3 days bad as a correction, but I think that next week we will see if these things continue. And understand always that if there is a big move in the market, as we have seen it right now, it can continue to the future. And this big move, if there is hope in the whole market, because there are a lot of people, they don't buy until they see and they trust that all the people talk that the market is good. You know, they come late, but they don't like just to buy because someone says to buy. But understand, this has to do with if you are just a short-term trader like swing trading, or you are like an investor. And as I always explain, people, you should know that if you are a trader and you have an investment, it means you invest in companies. This is totally different. Investing is for the whole life. You should invest each paycheck or each salary or each year. You should invest. This has nothing to do with buying and selling stocks, which is trading. And most of the people, this idea, it does. There is a problem with this OBS. Sorry guys. There is. Hello guys. Sorry for that. I don't know what's going on with this live. So, but it goes and it comes back. So let's continue and see if this will continue good, and hope we continue doing this live. So the first one who show up is Aura Pronobis. I haven't seen this guy for a long time. I don't know where he was hiding, but it's very good that he comes back. Rahmatullah Moody, hello, thank you very much for coming. Free Trader, also, I didn't see you one time or two times, I don't know where you are. Thank you very much for coming. Always, yes, Basan, I know your ID, so don't tell me you are Basan, I know you, okay? I hope you don't change your ID. Wise Man, how are you, Wise Man? I haven't seen you for a long time. Thank you for coming. Oran probably said, nice to be back on YouTube, on your YouTube live. Yes, I am always, on Friday, I am always here. It's you. Okay? It's you that you don't show up. I went to Twitch for certain days, and guys, if you have just time, for example, you have just time, please go to my Twitch channel. You can find the links in the description. Just if you have question, I have some live. You just come and let's ask your questions, okay? Because I can't be in the same place, in different places at once. So either I am here or at Twitch, or I will be making at Facebook, because I have a lot of guys there in Facebook, but I did only one live there, okay? But Fridays is always for YouTube, and I continue this for nearly 96 weeks. It means it's nearly 2 years. I am doing always on Friday. Before it was Saturday, but I changed it. Okay. And Clown Twitter account, Adam, thank you very much for coming. As always, very active trader, and he asks us a lot of questions. Tesla also. Hi, Tesla, how are you? Shikar Sood, how are you? Thank you very much for coming. So he said, I have bought your training level 2 ebook. I have read that. I want to know something. The market is range bound and sometimes it is volatile. Shall we continue to follow your strategy of buying? Now, Shikar Sood, there are many strategies I use. There is no one strategy in the market. I will tell you why. Okay? Let's say the whole market is going down. Okay? This is a fact of the market. You see that almost everything is going down. There is a downtrend. How can you go long and the whole market is going down? So you should be realistic. It means I'm not speaking here about what we call common sense. No, I'm not speaking about common sense. But I mean about the mood of the market. The mood of the market here in USA, we are in a strong market right now. 6 weeks, and I'm speaking about that. And most of the stocks go up. We have a lot of gap ups, and we have a lot of things going on. Now, in Indian market, I check that it looks like the same as our market. It was going for long. So you should check training level 13. So I will put it just to make sure you understand. So training level 13 is to buy from the bottom. So you should see your ETFs, it means industries or major indexes. Try to find an index where we have a few stocks. For example, let's say you have an index that it has 50 stocks or 20 stocks, or just smaller industries. Try to go there and apply my strategy. You will see it will be working. If the market has stopped going down and now it's going up, you will see that. Okay? Now, if all your indexes are still going down, so you should either sell short or you should short the whole market. And this, you will find it in training level 18. So please, Shikar Sud, it depends on the mood of the market. But you can find stocks that are going up, like training level 2, you can, yes. But you will find a few. And since the market is very dangerous, you will be chasing stocks. And this is not good. That's why you enter, and then the stock goes down, you exit. You enter, you exit. Because the market is not going your way. So, before here, when we begin to short here in America last year, we find some indexes or we find some stocks and we short them for a short time. If the market is still going down, because the market, when it is volatile, it doesn't go down good. It means it go down 2 days or 3 days, then it go up 4 or 5 or 6 days. So it doesn't have what we call trends. And understand, Shikar Sud, that if there is no trend, you can't do swing trading because you are just losing your money. And you can see that. There is no trend. It means the stocks doesn't move good, either up or down. So it's better for you, if it is volatile, do not do swing trading a lot. Stop swing trading and do, for example, day trading, okay, for a little bit, until the market shows you the way. The market should show you the way, either up or down, in order to do swing trading. Okay? So it's not one strategy that you apply on any market. It doesn't work. Although I am saying that you can find stocks. Now, these stocks that you can find when the market is troubled, what are they? You should see penny stocks or IPOs, new companies, because those two, they have a momentum. They don't follow the market. Okay? Let's say an IPO, a big company in India, and it was private and now it's going public, and all the people are waiting for this company. So you might have a momentum and you might see that this stock is going up for 1 month or 2 or 6 months and it is successful. There where you can make money. But if the market is troubled, okay, up and down, you should never stay that long. This is the reasonable thing that you should do. But don't be like blindfolded and you have a strategy that's going up and the market is going down. It will never work. It will never work. Okay? So try to practice. Don't use a strategy directly. Try to see the strategies that I have for each market. If the market is going down, I have either you sell short or you short the whole market using ETFs. This is the way to do business. Okay? If there is a trend in a stock or in the whole market. But if the market is 2 days or 3 days up, then 2 days or 3 days down, here you are just wasting your time and money because there is no trend. And believe it or not, there is no trend, there is no money. Because why you stay 1 week or 2 weeks or 1 month or 2 in a stock? Because there is a trend. And if you see, for example, training level 7, how to follow a trend, I will show you if the trend is strong, you can stay. But if the trend just began 2 days or 5 days ago and then it collapses. This training show you that it is not worth staying. Okay? So understand that you should practice. See the whole market, what it's doing. Follow the, for example, if you want to follow indexes, try to see training level 3. Indexes and their stocks. Each index, you see an index that it is doing good, you go to each stocks and find stocks according to training level 2. Okay? If another index is doing bad and it's still going down, either you sell it short, some stocks, or you short sell the whole index. Okay? So it's like when it is summer, you don't put too much clothes. When it is winter, it's very cold in the mountain, there are maybe snow, you should put a lot of clothes. So each time has its own techniques. You can't use one strategy for everything. Okay? You can't. You can do this in day trading, because day trading in the morning either up or down, so you can do it. So in swing trading is different. So Shikar Sood, please send me emails and we will work on this. Try to see indexes where they are going, because you send me indexes and I check them. I don't have the it's very hard, because you should work on it. It takes time. I'm not going to spend 24 hours working on your market and giving you the results. You should do it by yourself. That's why I have training. I train you to work, not to rely on people. Okay? If you find something, let's say you find something, you send it to me and you say, I find this index, I find these stocks, what do you think? And then I can work with you. Okay? So giving me the whole market, the whole indexes, and you say, oh, just go and give me some good indexes, some good stocks. I don't. You ask me to work. I'm not paid for this. It takes time. That's why for me, I put all the indexes in a portfolio. I put it in my chart. Okay? So for those people who don't understand. Okay. Tesla, Shikar Sood, before I go to the other guys, okay, before I go to Tesla, he said, I am still losing trades. Now, I will just give you this idea about how to see the sectors from my chart. But I don't know in India if you have a good chart that you can put portfolios and you put stocks. It needs work. Okay? So I will just give you this before I go to the other guys. And sorry, guys, please write your questions, write your comments. I just explained to Shikar Sood or Shikar Sood. I will explain to him this, and then I will come back to you. And okay, so let's go to the chart. Okay, so this is the chart, as you can see. Now, what do you see here? I will just explain for him what did happen. See, this is our Dow Jones. It's the biggest index in USA. It's called Dow Jones. It has 30 stocks. Now look what the 30 stocks are doing. They are doing excellent. You see, for 6 weeks from 26 December to now, they are doing excellent. This is what we are following now. So in order to get this, you should work on it. Now I will show you our sectors ETFs. So I put here a portfolio. It means I put just the indexes ETFs to see what's going on. For example, I will use the first one. Industrial sector. What is our USA industrial sector is doing? It's doing excellent. From, as I told you before, it's doing excellent. As you can see, there is a trend. Okay? You see the trend? But before, the market was going down. See? It was going down from December 3rd to December 24. It means 3 weeks. 3 weeks going down. So here you can't go up. You can't just find a stock and go up like this. The whole market is going down. How can you go up? The probabilities of going up is small. So if you go up in this time here, most of the time you lose money. Okay? So wait, you should wait. So understand that swing trading is about waiting for the momentum to come. You should wait for stocks. You don't chase them. So when you trade here, it's the opposite of here. Okay? So this is training level 2 or level 13. This is where you find stocks. Training level 2 or training level 13 or training level 3. Now here you can sell short, training level 11, or you can use the whole ETF and you do shorting the whole market with indexes, ETFs. So why I put these sectors in a portfolio? Because whenever I want to see to find stocks manually, because from the bottom you should put stocks into portfolio. You can't find them by search. If stocks are going down and then they are going up, you should put them into a portfolio and follow them. This is the rule. Follow stocks. When you find an opportunity, you buy. Now I can show you here, here. All these are indexes. Now you can see this. Spider Fan is doing excellent. You can see. All USA are doing excellent right now. Okay. Are doing excellent. So our market now is strong. Just to show you this. Oil and gas in America is not doing that good, okay? You can see when the trend goes down for this oil and gas, as you might know, oil and gas in the whole world was not doing good last year, and this year it begins little bit, but it's not that big, okay? Just to show you. Okay, so you see, everything is going excellent most of the time. Okay, look at this gap down here with technology. It means here, for those who don't know why we have a gap down in all the stocks of technology. Why? This is not a news. This is not earning news, because earning news, each company has different earning news. So why we have this on one day, which is 21st of December? Why? This is because I think they downgrade this ETF. They downgrade, it means analysts say bad about it. Okay? Since they say bad, some guys who are day traders, they short this technology stocks. That's why they lose a lot of money. So here we should just understand what's going on in the market in order to take actions in the future. So these are sectors, we have industries, and we have a lot to work on. That's why you should work and put portfolios and then follow them. Okay? So this is just an idea, Shikar Sood, and understand that you should work. It's not easy. It's not just put the strategy in anywhere and you find stocks and you begin to making money. This is not a get rich scheme. It's something that you should work on, and it takes time. Okay, I don't have a magical formula for you or for anyone to make money just because you use my strategy. Okay, so you should work on all aspects of my strategies. So let's go back and see our friends what they are saying. So Shikar Sood, as I told you, work. If you want to go to training level 3, 11, 13 and 18, if you don't have money, I still have the 80% for ebooks. Okay, so try just to get them, study them, and begin to work. If you have a question, just send me an email and I will be working with you. Okay, but asking me to look at your market and work on it by myself, I will not do. It takes me time. I am not paid for that. Okay, I help if you work, but if you don't work, you know, it's very hard. So if you don't work, how can I work instead of you? It doesn't work. But I will help you when you begin to work, when you begin to understand what I am saying, and you begin applying this on your market, and then you will understand clearly, and you will see your market with another eyes. Before you see them with other people's eyes, now you will see them by your eyes. You will see where the market is going. Is it going still down? So if it is still going down, you see the indexes are still going down. How can you go long? It means you want stocks that go up. Most of the time, you will not find that much. You will find a few. And most of what you find are penny stocks, it means the smaller stocks, and IPOs, new companies. Okay, so Tesla, you have written a message and then you retracted it. It means you deleted it and you say, I'm still losing in my trades. Okay, you can propose a stock that you bought and you lose it, and we discuss it if you want to. Or you can send me an email. If you don't want here, you can send me a private email and I will be happy just to look at it. Okay, Artkov, hello, thank you very much for coming. Now let's go and see Tesla. He has another statement. He says there is a need of a process to trade. Morningstar sector doesn't give more information if the market changed. Which sector is leading or bullish in short? Or medium or long? Listen, Tesla, Morningstar, it makes indexes. It can't give you advice or give you how to trade or give you whatever. So why do you want Morningstar to give you information on how you trade? Morningstar is a company, is a broker that makes stocks together into indexes. It has nothing to do with your trading. And how this bullish or in short or medium or long frame, or this is what you see yourself. So other people see something else. So Tesla, if you are going to follow me, you should follow how I see to the market. I just explain how I see the market. So if you accept it, you begin to do like me. If you don't know how to, you should go to my training and begin to train yourself. Okay? No one online for free, he will give you what to do or how to look at the market, or it's a training. Understand that it's not free. There is no free thing that you can rely on, because you should understand yourself, the strategy and techniques. Okay? That's why the people who follow me, they should follow my vision for the market. Now, if you are watching TV here and there and see the other guru and see the other what the other people say, this you get mixed up and you have a lot of ideas and you will never make it, because you have a lot of information that are opposite to each other. Okay? So, but if you follow the thing I show, it means you will get another idea. If you do some trades and you lose, try to see, are all the other stocks losing? Yes or no? If your stocks only that are losing, it means the selection that you select with your selection, there is a problem in your selection. So it's time to see what's going on in your selection and techniques. Why this stock you bought today, tomorrow it goes down, and you bought 10 stocks and they all go down? It means that the momentum you are looking for is wrong. Okay? So this is just my opinion, but I don't know how you are trading, or what is your criteria of searching for stocks, or when you bought stocks. Okay, I don't know, so I can't give you an exact information if, for me, I don't know how you are trading. And sometimes losing is just because of the whole market momentum. It means sometimes, like before, like last year, stocks go for 1 week, 2 weeks up, and then they go down 2 weeks or 3 weeks, and it's all the way like this. So either you should not stay too much in the market. You can check my training level 15, how to trade stocks less than a week. You only trade a week, you don't go above it. Okay? That's how you do things. Now, before we go, let's drink some coffee. You know, I just wake up. I should have my dose of coffee in order to be awake. If I don't drink, I can't continue. So let's go to the other guy. Oh, free trader. He said I was busy little bit. Okay. Understand, free trader, that the market is always here. Last year, this year, next year, 100 years ago, even 500 or 600 years ago, where the first stock market begins with 2 stocks in Amsterdam in Europe, I think in the 15th century. The market is still there, and it has the same problems. Some people make money, some they lose money. This is typical for all the markets in the world. Okay? Those who try to understand what's going on and how to take advantage of some movement in the market, they can make money easily. Okay? If you can remember, all of you guys, 6 weeks ago, I told you the stock market is strong. 1 week, second week, third week, fourth, fifth, sixth, and now I think we are in the 7th week. Next week. So if you in this weeks you don't make money, it means that all your strategies you are following are wrong, or your selection of stocks is too bad. So guys who have my own strategies, if you made money, it's good for you. If you don't make, you should send me an email, send me a stock and tell me, oh Karim, what do you think about this stock? I have many guys who I follow for many years, either good or bad. Some they make money, they send me their trades. Some they don't make money, they send me their trades, and I give them suggestion. I say, okay, according to the strategy, you buy here, but why you buy here? Okay? According to our strategy, you should stay longer, but you exit. Why? Okay? So there are rules that you should apply. It's not a strategy doesn't work by itself. You work using the strategy. Now, if you don't want to work, you want just get rich scheme. Oh, send me stocks, I buy them, and then 1 week, 2 weeks, I make money. That's what I want. This is not what I do. Okay? This is not what I do. For me, I try to train people to work by themselves, to be independent from me. That's why a lot of people, they make money, they send me their... they are happy, they send me their trades. Even now, some people, when they make money, but they exit, and I ask them, why you exit? You should give me a reason. As, for example, training level 7. It shows you the reason why you should exit a trade when you follow for a long time. Okay? I have a live trade of 5 months and 2 weeks. You find it in live trades in training level 20 by videos. I stayed 5 months, 2 weeks. Each week I will do a video and I explain what I should do. Should I exit? Yes or no? This is a big practice for you guys, those who want to practice how I follow stocks or how I buy them, when I buy them, and that's it. So Tesla, as I told you, you say there is a need of process to trade. Morningstar sector does not give more information. I just showed to you Morningstar sectors. They are strong, and how they are strong. And you tell me Morningstar doesn't say anything. Morningstar is not a person. It's just a company that make indexes, put stocks in them. Okay? And right now, guys, for Tesla and for Tesla 3 and for Shikar Sud, I will show you right now how to go to find the sector, to find the industries, and to find the stocks. I will give you an example, okay? Just to make sure you understand what I'm saying. So let's go. Okay, first, as you can see, this is a portfolio, okay? Now here, in this portfolio, you should see when I put them. Oh, okay, there is a lot of a duplicate thing, so we are not going to see duplicate thing. You are looking to see this. Okay. In 29 November 2017, I put the list of all. Okay? So I know by looking at the percentage, by looking at the profit and loss, I will know which one are strong, which one are not, which industry are the people are selling, which industry, okay, which industry from 29 November 2017, which is making money and which is not. Don't look at here we have only 6 weeks or 7 weeks. Now, if you want to see our USA sector, industries, and how you look at that, so what you should do, you should take this down like this, because these are portfolios. Now I will show you my portfolios, for example, sector index, ETFs, trade now, inverse, Warren Buffett stocks, oil, utilities, and ETF major indexes, retail ETFs, market ETFs, and marijuana ETFs. All these I have seen them before, and I put some stuff. So what you should do, you should go to this, the here below the bar, the blue bar, click that and go down a little bit until you see Morningstar. Here, what you are talking about, Tesla. Morningstar industry groups. Here, Morningstar, it just gives you the sector. For example, aerospace, defense. This is a sector. It gives you 2 industries: aerospace defense major dive and aerospace defense products and services. Now, if you want to see everything, you should click the sector, because it gives you the industries and stocks. Now let's click on aerospace defense and see the stocks. Now, first we should see the 2 industries, what these industries are doing now. Click first. This is called aerospace defense major dive. This is the what we call the industry. Now go back. You see that this industry, since April 2017, it was in a big move until April 2018. It means 1 year going up. Now, if you bought some stocks here, you could have made big money, okay, in from 2007 to 2017 to April 2018. Now here you see the big trouble in our market, which happens here in the February here. This is the correction. From here on, let's take this. You can see on the left side, it was excellent market for this industry. And now here, the market is not doing good. It was going up, going down, going up. So here we have a troubled market. So if you want to trade this, you will have trouble and you lose a lot of money because the trend is not clear. Okay? Now, but you see at the end, 6 or 7 weeks. Look, the 6 or 7 weeks, how good they are. Now, they can collapse, yes, at any time, yes. But it was going good. Now, you can see the second industry. Now, these are industries and what they are doing. Now, what I show you right now, if you want to get some information, is training level 3. How to buy stocks according to our strategies. Training level 3. Now, let's see some stocks, because these stocks belong to industries. So you see this? See this stock? So from 350 in 2 weeks it goes to 425. Okay? So this, how do you know this trend? Is when you follow my strategies, you will find the stock, because in the industry it's called product and services. Product and services, see, product and services, we have a trend, and stocks, we have a trend. Now Boeing, you can see Boeing, for example. So see, from 313 to 404. Other stocks I just show, just to show and understand that stocks are not the same. Some are good, some are not. This this company has been maybe bought because there is no here the volume 141. It means that this stock has been sold to another company. Okay. ESL, see, the stock was only 88, now it is 121. You see. Now this is in general how do you see the stocks, but understand the stocks are not all the same. Okay, let's see, like this stock AIR, it's doing bad. It's not doing the same as the others. So if you buy this stock, if you buy this like 1 week or 2 weeks ago, you would have lost a lot of money. And see the chart. The chart is ugly. Ugly. Yeah, few days going up and then was shorted. Okay? So you will see that this stock is not good for swing trading. It's not. It's too bad. Another. So you see. Now compare this stock to its index. It's not good. This is doing bad, but the index is doing good. What does it mean? It means a lot of stocks are doing good and this is not doing good. So this is Tesla. This is training level 3. It gives you how to look at industries, how to find stocks, when to buy them. But understand that if you are looking for a sure thing, you want just to buy 100% you make money, this doesn't exist in the market. And if you have this idea, you will stay 100 years, okay, trying to find the sure things you will never find. It doesn't exist. Okay? So, in general, try to work with probabilities. There is no sure thing. There is only probabilities that can make you money through the year, if you use it right. Okay, so let's see other guys. Omar Hamdi, how are you? Thank you very much for coming. I didn't see this is. I think you are for the first time here. Thank you very much for coming. Trump, thank you very much, Trump, for coming as always. Trump D said, no big company is trading for bargain. Market could head lower with trade war coming. No, listen. Predicting the market is a bad idea. If you are predicting trade war, we have seen shutdown of our government and the market is still going up for 7 weeks. Where is this shutdown information or news affecting the market. It did not affect the market. It's Wall Street who changed the market. It is not the world war or anything that will change it. So if you are scared to trade, do not trade. Keep your money and do another business that it's easier. For example, I always say this, and I explain it. So Trump, since we are in this situation, you said in the downtrend the market go down in the morning and afternoon goes up. This is not a downtrend. You are speaking about fluctuation of the day. It has nothing to do with market trend. The trend is formed by days, candlesticks, not by 5 minutes candlestick where in the morning you are looking for the morning and the afternoon. For me, I don't look in the day. If I want to buy, I buy at the end of the day when there is a signal. I don't buy in the morning because it can go down and I lose my money. I am not doing a day trade. So don't mix things. You, Trump, I think you still have a problem differentiating between day trading and swing trading. Swing trading, we are following the whole trend. It could take few days, few weeks, or few months. Now, if you are doing day trading, you are looking for the fluctuation of the day. It can go up and then down and then up and then down and then up. It's how the traders they do in the day. So if you want to be a day trader, try to concentrate your information on day trading techniques. I present them in training level 12 and 11 when you sell short. But these techniques, you don't apply them for short-term trading because they don't work. So you should always be in one thing. Are you a day trader or are you a short-term trader? Now, in order to, before I go to the other guys, what they say, I will explain to you why the stock market business is not the same as the other businesses. Because the value in other businesses stays. Now, in stock market, the value of stocks doesn't stay. I will give you, and guys, I have explained this before, but for you guys, for Trump and for the other guys, who you don't understand how stock market is different from other businesses. It is a business, yes, but it is totally different. I will show you why, okay? So please pay attention. If you have later a question, you should ask me, okay? I will show you the difference between stock market trading and between another business like car dealership, okay? I have explained this for you guys, but I will repeat it. There is one guy who told me, oh, Kareem, that is sometimes we repeat information. Yes, because the people, they don't understand. You should digest what I say. It doesn't mean just you hear it. You can hear the information, but in your mind, you still don't understand what I'm saying. And that's why you will ask me the same question again and again. For me, I will give you the same answer again and again because you forgot. Okay, so let's give you the difference. Okay. Okay, guys, look at this. So I will give you two businesses. Here we have stock market business. Sorry for the handwriting because I am just. And here we have another business which is called car dealership. Now, why I use always this? Because people, they know here in America, when you want to buy a car, you understand, you go search and find information and compare. I will give you an example of Facebook. If you want to buy Facebook, now let's see what is the price today. Today it is 176.33. 176.33. This is Facebook price today at the close. If I ask you the question, can you find Facebook shares in another market with $50, for example, a share? Can you find that? Or $100? Or $150? Can you find the other prices than 176.33 cents? I ask you the question. You told me no. We can't find. Now why? Because there is only one price, one market for each stock. We don't find another market. It's only the exchange. When you get buyers and sellers, and we have this price. Now, let's go to car dealership. You have a car, we have the model, the same year, the same condition, okay? It's all these are the same thing. Now, in the car dealership, when these guys are going to buy, if he go to the market, let's say he find that this car is $10,000 in the market right now. In this dealership, the other dealership, it could be $10,000 or $11,000 or $13,000, depending on the dealership. Now, this dealership, when he wants to buy a car, did he buy it with $10,000? No. He go to the auction or to another market in another state, and he find this car, the same model, the same year, the same condition, at $5,000. What does this guy do? He buys this $5,000 car, which is the same model, the same year, the same condition, and goes to his market here in this state, and he sold it with $10,000. So this car has here 2 prices, 3 prices, 5 prices, 6 prices, 100 prices. Although the car is the same model, the same year, the same condition. So you understand that in the car dealership business, you can find a lot of prices, and sometimes cheaper in the auction with the same model, same year, same condition. Now, go to the stock market. Can you find Facebook with $50 or $100 or $150? No. That's why stock market feature is a change. There is always a change in value. Here there is no a quick change. It doesn't mean that today cars are $10,000 and next day they say to you, oh, okay, this car is only $5,000. It doesn't exist, because if they change, if there is like a big change, all the dealership will lose their money, because if he buys it at $5,000 and he finds it at $5,000, he can't sell. In order to sell, he will put it like 3,800 or something like that, and he lose money. That's why this market of dealership is in the value, it is static. Static, it means it doesn't change that much. That's why people, they can make money. They can make money because they can find different prices, and you choose the good price and then you sell it. Okay? Even you. Here I give you an example. Okay? Now, you are living, for example, it's just an example, okay? You are living in New York City. This model and year and condition in New York City is $15,000, the car. Because the way of living in New York is so expensive. It is expensive. Because the people, they get paid more and the life expenses are more. Now you go, for example, to Texas, for example, and you find this car at $11,000. You can go to Texas, or you go online and you buy this at $11,000 from Texas, and you spend some money and you bring it to New York. Okay? You can sell it with 15,000. So you can make money also. So you see how easy it is to do a car dealership than to do stock market? You see that? So this explanation, I try to make sure you understand that the stock market changes the value. Each minute, each second, things change. Let's say, for example, Facebook, few days ago, let's say it was 157. Few days ago, but now it is 167. Can you buy Facebook at 157 now? The answer is no, because the price now is 167.33. Next week it can go up, it can go down. It's stock market, it changes. Car dealership, the prices doesn't change that much. That's why you can make money. That's why a lot of people, they do business. And this happens for big corporations. Why big corporations? They make money. Okay? I just give you an example, and this is the last example to understand. For example, now let's say you take a big business like Walmart. Walmart is a very known. Walmart, why it is successful in the business here in America, in international business, why it is successful? Because they can get the price so low. The price is so low, getting it. For example, in our area, milk, I give you just an example, okay? Milk is $1.50. You go to another competitor, let's say Harris Teeter, for example. Harris Teeter, another company, you find it $3.80. Now, ask yourself, why Walmart, the price is $1.50, and Harris Teeter is? It's just because Walmart can buy a lot, and it buys so cheap from the thing, because she can buy everything, and she can put a price to a merchandise that Harris Teeter can't. Okay? So this is just an example. For example, Walmart brings some stuff from China. That's why if you go, for example, to a lot of stuff clothes. This is just give you an example. If you find, for example, clothes, vessels, for example, whenever you see it says made in China. Now, why Walmart go to China to bring these things? Why we don't make them here? Because if Walmart makes them here, they will be expensive, like our merchandise for some companies. Expensive. So the people, they can't buy them. So they go to China, they buy them cheap, and they sell it to us expensive. Expensive in the sense that they buy cheap, they buy more. So that's why they make money. That's why Walmart is one of the biggest companies in the world. Okay? It's just because of this, of the price stability. Price stability. And this, if you want to do a business, any business, you should understand this price stability in order to make your business. But if you go to stock market, things change. You should go with the change. If you don't go with the change, you will be losing money. That's why we have strategies. Okay? So hope this explanation. Now, if you have any question about these examples, you can give me your opinion and we can discuss it after that. Okay? Now, let's see other guys. MK Khan SWM. Hi, good morning. How are you? What's this? He said, back me. Please, MK Khan SWM, please write a complete sentence to understand what you want. Because what do you mean, back me? I don't understand what you mean. Shikar Sood, okay, thanks sir for your help. I like your advice very much. Thank you. Shikar Sood, as we have talked, go the training, check everything, and send me an email, and we can discuss this privately because this is about training. Now, another guy, Ugandan Knuckles, thank you very much, Ugandan Knuckles, for coming. I haven't seen you for many weeks. Hope you are okay. He said, hello Karim, how are you? Can you put stop limit price above the market price? Yes. This you do it when you sell short. Okay? When you sell short, I will, I think I have explained this before in one of the things, but I will, Ugandan Knuckles, I will explain this right now, okay? Just in few minutes before we go to other things, okay? So, you say, can I use... Now, here is an example. These are candlesticks. It means the stock is going down. And you, from this point, you decide, since the stock is going down, let's say the stock was $20 and it's always going down, and you decide to buy, to sell short here. Just an example, okay? Let's say now here it is $18.50. You want to sell short, And if the stock is going down, let's say 1650, you will be making money because the downtrend is still going down. Now, because the market is going down, you want to protect yourself with a stop loss. Since your direction is going down, so if the stock goes up, let's say you put 19 here, 19. This line here is your stop loss, and you can use stop limit order. Now, what does this mean, stop limit order? It means you ask your broker that if the stock goes to 19, okay, you will use a stop order which becomes a market order. You should sell. If the stock is going up and crosses 19, this is what do you mean by stop limit order? This is when you are doing selling short. So understand that you are going down, and you wish and you hope and you wish the market continues to go down for this stock. But if the market goes up like this, here, a green candlestick, and it reached 19, you exit at $19, and that's it. But if the stock is going down, this stop limit order is not triggered, okay, and it just it stays like this. You can change it later if you want to. So hope you understand this. And this what you should do, stop limit order above the market price. This is the market price, which is 1850 now. 1850 now. Okay, this is if you want to exit if the market is against you, because you bought at 1850. You think that the market is going down, but you protect yourself with the stop loss, stop limit order, and if things go wrong, you exit the trade and you only lose $50 for 100 shares. Okay, so that's it. So hope the explanation. Okay. So thank you, Ugandan Knuckles, about this question. And please, if you have something that you don't understand, just ask. We are here for that. Now, always, Basan. Let's discuss a stock I have now, HCP and MPW. Listen, Basan, I will see the stocks, but I will not say nothing because this is part of our training, and you should ask me directly about your stocks and according to the strategies. So I will not give any information about my strategies about the stocks, but I can just check them, because I think you didn't send it to me, or you sent it to me and I didn't see them, because in the afternoon or the evening I was sleeping. That's why you see, Basan, I'm still drinking my coffee. Okay. For this weekend, please, Basan, if you have a question about the stock or these two stocks, send me an email when we finish this live, and I will answer you in the golden subscription. I will answer you tonight, so you will see it Saturday. Or if you have other questions, please ask them before I finish my work for the golden subscription search and questions. So HCP. Well, see, I don't like the stock as it is in general. Although it's going down, like you see here, a long time going up, but it is troubled. Stocks that are troubled, it means they don't have a good trend for a long time. Okay? They stay good for 2 weeks, 3 weeks, or 1 month, and then they collapse. And most of the time, I'm telling you something, I don't like financial stocks. I don't like them. Real estate and the other stuff. Most of the time, I don't like them. They are very, very troubled. Okay? So, another question about MPW. MPW. MPW is, you are trading the same thing, which is real estate and rates. Okay? And I think it's the same stock as the other one. It is less volatile. Like here, it's less volatile. It was good in the first, but right now it is making it is very, very volatile. So for example, you buy here, it goes down. If you put a tight stop loss, you will exit. Like this, for example, this candlestick. If you bought it here and you have this and you put tight stop loss, you exit the trade, although the stock is going up. And see this very long candlestick, very long candlestick. So try to make sure about this and check for stop loss. If it is tight, you will exit at any time. Because see, from here, the stock was 1820, it goes to 1746. It means you are losing like $80 or $85 for each 100 shares you bought. And please ask me the same question. I will make a video for you for this kind of stocks. But in general, I don't like financial stocks. I don't like them. They go slowly, and for me, I have a temper. I don't like stocks that I should wait 1 year to go $1 or $2. I want stocks that go quick. Okay? If it is $20, it can go $1 or $2. That's good. It means I can make a lot of money when I buy 500 or 1,000 shares. It is quick. Okay? I don't want to buy a stock that it goes 25 cents or 10 cents a day. It means I should wait 6 months and then I get $2 or $3. It means it's not worth it waiting for this stock. That's why, for me, I like always strong stocks that can move fast. When they move fast, I can make money in shorter time. Some stocks, you stay them 6 months and then you don't get nothing. You see a good trend, yes, but in terms how the stock moves is weak. It's not strong. Okay? So let's go to Tesla question. He says, what's your process? Which process? What is the process that you are asking about? Process of what? Do you mean how I follow stocks or how I trade? This is a training. I can't speak about how to process things, but I don't even understand what do you mean by process. What's your question? Do you mean how to follow the trend? Do you mean how to buy the stock or when to buy it? So what's your question? Process is something general. I don't understand. So Adam said, big institutions and banks trick retail traders, manipulate little and trigger their stop loss. So you can provide liquidity to them, so they can buy cheap on the uptrend. If no sellers, how they go? Hey, listen. These ideas of big institutions, banks, retail traders, this is entertainment. You go to TV and they begin to speak about these guys, oh, retail traders, or big institutions, oh, banks, and they do this, they manipulate this. Have you ever seen in the trade, when you are trading, have you seen them? The big institution, they have a sign, or banks, they have a sign, and they follow your stop loss, or they follow. So please, all these, I'm telling you, is bullshit, as they say. This is entertainment. Some people, it's like most of the time old people, okay, or people who want to entertain people, and as if they know who is manipulating who. Okay? In the market, it is a secret. You will never know if it is a big institution or it is a bank, a hedge fund, mutual fund, a trader. You will never know. It is a hidden thing. What you see is the price. You say, for example, you have problem with the stop loss. Okay, don't put stop loss. Don't put it. Why you are putting stop loss if you think that your big institutions are following you? It means they leave their business and they follow you because they know you and they want you to lose money. All these is entertainment. When you are talking with your friend, you have watched the 1 hour. Two guys are speaking about retail institutions. And institutions, retail traders, institution traders, bank traders. Okay, you are just having a good time, putting some coffee or some tea and speaking about the market and how they manipulate the market. Okay? If you have a strategy and you see this online, okay, just go and make money from them. Try to see how do they move and make money from them, since you know that they manipulate and they use stop loss and other stuff. So understand that these things are hidden. No one knows who is buying or selling. But if there is a big sell-off, it should be mutual funds because they have the ability to move the market. Okay? Other day traders, they help. When they see something going down, they sell short. So we have two actions of the market. Two actions. Some people are selling, Some people are selling short. That's why the stocks and the stock market move down. Okay? There should be big guys are doing this. But you use a stop loss or you don't stop loss, it's your problem. It's the way you trade. Okay? It's the way you trade. No one obliges you to put stop loss or not. If you think that stop loss is bad for you, don't put it. So, for me, I'm not trying to see who does what. For me, I see the price. The price tell me everything. I don't need to know who is who. And in trading, if you go to this is funny. This is funny. If you go to day trading, 1 minute chart, you will see thousands of shares are sold and bought in less than a second. So, do these guys are institutions or banks or this is for me, it is just wasting your time trying to search to find reasons that no one knows. The exchange itself, it doesn't know who is buying, who is selling. They don't know and they don't care because stock market is free. No one is following the other, who sold, who bought, who. But the only thing that makes you understand is when someone, after a few months, when he bought a lot. I will tell you this. If you don't understand, I will tell you this. Okay, just to explain. That's why when you apply for a broker, they ask you this question. I know most of you guys, when you apply for a broker in the USA, they ask you, do you have 10% in a company? Why they ask you this question when you apply for a broker account? Because 10% of a company, it's a lot. You have big rights sometimes to change the CEO if you want to. When you are in the meeting, the shareholders meeting, you can, because you have power, you have 10% of the company, like Warren Buffett, what he did in the past with Berkshire Hathaway. Okay, I think Hathaway is like this. Okay, so Warren Buffett bought this company, Berkshire Hathaway. At first, it was a textile company. It means it has mills and it makes textile. There is a CEO and he was fired by Warren Buffett. Why? It's just because when he wants to, this CEO, if you don't know the story, I will give you just the story very quick. So the CEO asks Warren Buffett, okay, at that time, he asked him, the CEO wants to buy. It means to buy for the company, and the company is Berkshire Hathaway. Now they agree on a price. I think it was $11.65 or something like that at that time. But so Warren Buffett, he owns some shares, and he wants to sell. But this guy, CEO, when they want to sign the paper, he changed the price from 11 and he put it, for example, $10.65. These numbers are not correct. I just give you, because it was a small number. It means he did not, although they agree on 11, but he put 10. Because Warren Buffett, if he sign on 10, there will be no 11. Okay? So this is a trick that this CEO has done, which in business, it is a bad behavior. It's bad when you agree with someone on something and then you change your mind and you want more. So what did Warren Buffett do? He has a certain percentage in this company. Let's say he has 6%. Now what does he do? He, instead of selling his shares, he was so angry, he buys more shares, more and more and more, until it goes more than 10%. And when they go to the shareholders, he suggests that this CEO will be fired because Warren Buffett has a big number in the company, 10% or more. I don't know if it is 10, but it should be more. He has the majority of votes. So he votes against this CEO and he succeeded. And this, he fired and he will become the CEO of Berkshire Hathaway. So you see that? So this is just some examples I gave just to understand how business is in the stock market. So let's go back to our explanation and see the other guys what they are saying. Okay, let's go to another question with Adam, clown with Twitter account. How they gonna get their billions in the trade if no sellers? So they need to get sellers. So what do you mean? I don't understand what you are saying a lot of things, but I don't understand. You should keep with one example. Don't change. They buy, they sell, stop loss. You are having a lot of things in one thing. What do you mean they have no sellers or no buyers? If the market, if the stock is high volume, things can change. Okay? So the price, it changed very, very quick because of high demand of asking for the price, asking for more shares. If you want to buy more, the stock will go up. If a lot of people, they sell, they will make the price go down. So why you are worried about people who buy or who don't find the sellers or find the buyers? This is not your business. The market is always finding ways, and this is the business of market makers. Market makers help people buy and sell in the stock market. That's why you see some stocks that have high volume and some other stocks that are low volume. Low volume, it means no traders like this kind of stocks. They don't come to buy and sell. It is not attractive. Okay? There are some stocks instead, they like to trade because they can make money, because there is high liquidity and the stock moves good. A trader can go to a stock that moves $5 or $6 a day, then he goes to a stock that moves 5 cents and the stock is $100 and he goes by 5 cents. In these stocks you can't make money. That's why you need high volume stocks. you need that stocks go fast in order to make money. So these ideas about institutions, banks, how do they make their money, this, you are just having questions that lead you nowhere. It's their business. Now think about yourself. You are a trader. You want to make money, so you should find strategies, techniques to make money for yourself. Don't look at the institutions if they make money or they lose money. It doesn't matter. Who cares? Who cares about these guys or these banks? And how do you know that they buy or sell? If you are watching too much TV, I'm trying to tell you, stop watching too much TV, because it will give you ideas of entertainment. Ideas of entertainment, it means you are not focused on your trades. You are focused on other people's business. Who cares about these big institutions? Who cares if they buy or they sell or they make money? Or banks. Even if it is your bank, who cares? You should care about your business. Try to see your trades. If you are losing money, you should find the way to solve your problem. But if you stop doing business for yourself and you are looking for other people's business, they make money or they lose or they have sellers or they don't have. So these questions are entertainment questions. Entertainment. You want just to know in a market that no one knows anything. How do you know when you trade, a day trade for example? How do you know if there is institution or banks or hedge fund or mutual fund or even Trump, our president, is there to buy or sell? How do you know? They don't give names. They only give the market or the broker name. But no one knows who is buying and who is selling. And this is a secret. Even if you want to search, you would never find. The government, even if the government wants to know, it will take months and years to find who has done what. It's not easy. Okay? So, for me, Adam, you should focus more on your trades, on how you make money. Okay? Following entertainment, I am not for that. Now let's continue. Jesus Miranda, he says any. I don't understand what you mean by any. So could you please make the full sentence so I understand what you say? And thank you, Jesus Miranda, for coming. It's a long time I haven't seen you. Thank you very much for coming. Now, another guy who is always hiding. I haven't seen him for a long time. Andrew Trapman. I haven't seen you for a long time, man. You say trading, investing, motivation, clown, through that. A lot of things going on. Jesus Miranda says, sorry, any thoughts on binary trading? Listen, if you are a day trader, you can trade anything. But understand that binary trading is leveraged. What does it mean, leveraged? It means you can make a lot of money or you can lose a lot of money in a short time. And this is not good for beginners. But in those brokers, since they don't ask a lot of money to open an account, sometimes it's free. You just open an account, put $500 or $200 or $1,000, Understand that this, you will lose it in few days, few weeks, you lose all your money. Second thing is that they use the spread. It means when you want to buy and want to sell, it's a very, very large money that you lose. So my suggestion, do not go to these binary options or binary trading. And understand that if you go to options, you will wipe out your account in a few days or few weeks. Because the risk is 100%. Whatever you put, you can lose it all in 1 day or 2 or 3 or 5 or 1 week or 2. So my suggestion, try not to go to leveraged vehicles of trading like forex, options, binary options. All these are very, very dangerous. And futures, these you can lose all your money in few hours. All your money, 2,000, 5,000. If you don't know what you are doing, you can lose it all in a big move in the market. Okay? So what I suggest, you begin with the stocks first. When you can make it in stocks, because it's very easy, it's not leveraged. What you see is what you get. Okay? Let's say you buy a stock at $10, you sell it at $11, you make $100 if you bought 100 shares. It's so simple. But in binary options, if you buy $1,000, you can wipe it out in a few hours and you have zero. Why? Because it is leveraged. These are not for beginners. These are for professionals. They know what they are doing. And these brokers, they advertise a lot. And they say it's easy. It is just 50 by 50. You can make money, you can lose money. But we will show you how to make money. And you end up losing all your money. And then, after 2 months, 6 months, you have another $500 or 1,000. You save them. And you go to the same broker. And you trade. And you lose them. And this is the story of leveraged things. Ugandan Knuckles say, thanks for explanation. But stop limit above market price going long is not possible or not? Oh no, it is. If you are going long and you want to exit at a certain price, yes, you can do that. Because what does it mean stop? Stop, you want to exit at that price. But I will tell you something you don't know. Here you show me that above market price, going long. Here you are going to use not a stop loss. This is called, it's not stop loss. It's an exit point you want to exit. But this technique that you are using is too bad. Why you want to exit when the stock is strong and giving you money? I will explain that. Okay? So, Ugandan Knuckles, I will explain that for you because you gave me another version. So, I will explain that. Now, so this is when you want to use an exit point. Let's say here, you bought the stock at $20. Here, you buy here. And you say to yourself, if the stock goes to 25, I will exit. I will make $500 if I buy, for example, 100 shares. Just an example, okay? You can buy whatever you want. Okay? And here, you put what we call exit point. Exit. You are exiting the trade. It's not stop loss, but you exit. So you want to exit the trade at 25. Okay? Is this a good strategy? No. It is the worst strategy you can do. I will ask you another thing. What if the stock that you want to exit at 25 goes to 100 after 3 months? Okay? How much you make if the stock goes to 100 after 3 months? You will make 500% of your money. If you put 2,000, you will get $10,000 after 3 months. So, why you want to exit at 25 if the stock can go to 100? This, you have a problem in doing the business. So, if you want to learn how to do this, how to exit on time, I will teach you something else. This is training level 7. If you have golden subscription, you find this training for free. 13 training for free. You find number 7. If you don't want to go to golden subscription, you can just go and order training level 7, how to follow the trend, and I will show you another way. You should never stop yourself in a good trade. Okay? So this is just an example. And here, if you want to exit, yes, you want to use, you can use even a stop or a stop limit as you like. It means, a limit, what does it mean? It means if the stock is 25, it reaches 25 for real, and then it becomes, stop becomes market, and then you can exit the trade. You can do that, yes. But here I'm speaking about how to follow the trend. You are wrong to exit with little money while you can make a lot of money. This is not good in swing trading. I don't know what you are doing, but this is not good, according to what I do. Lehsan Gasiras, he said, hello Djellala. Are you following Litecoin surge in price? Litecoin surge? No, I don't follow. I don't follow Litecoin when they go down. So let's see. I haven't seen Litecoin for a long time. Let's be Litecoin price. Yes, I see. Let's see Coinbase. I will just go and see. Let's see. I will show you. Okay. Look at this here. So the Bitcoin goes 7.0 60%, Ethereum goes 13%, Litecoin goes 30%. Yes, there is a surge in this in Litecoin, okay, but you should always follow this in order to find a way to enter. But it's better to do it as trading, not investing, because I will show you something in this Coinbase to understand, because a lot of people they don't understand that there are two things in cryptocurrencies. We have to buy long, like an investor, as I say, and most of the people, they lost a lot of money, okay? And there is what we call trading. Trading is you can buy and sell instantly, like when you do day trading in stocks. It's not because some people, when they go to buy these, they think that they are investors. It means they buy and they leave it for 1 month or 2 months or 6 months. This is very dangerous. So you should do trading. I will tell you why it is so dangerous. Okay? So let's explain this. I will tell you why it is dangerous to stay too long as an investor. So, two things. Now, here I will show you what's the difference in cryptocurrencies between when you are a trader. A trader, it means you can buy and sell instantly. It means you don't wait. You don't wait. They told you, you bought at this price, and you wait 2 weeks until you bought them. This is not trading. This here you are doing investing. For those guys who don't understand, when you open an account and you do investing, what does it mean? Let's say Litecoin. Do you know Litecoin before? It was, let's say, 245 before. But it goes down to, I think, 25, and now it is 40. Okay? But understand that 4 months, 6 months, 7 months ago, it was $244. Okay? So you should not do investing, because in investing, if something goes down, you can lose all your money. Now, in trader, what do? Let's say the same thing. Let's say last year, 2000, for example, 18, it was 245. It stops at 25. Now it's 46. So you should buy in this area here. You buy, you make some money, and you can sell instantly. It means this is a trading, and you should ask Coinbase. You do an account as a trader, not as an investor. If you buy something and they ask you to wait 2 weeks to get your coins or Litecoins, it means that you are investing. You are not trading. And another thing, as a trader, you can sell short. If, for example, now it is 46, and you want to day trade and it's going down to 25, so you can sell short. Sell short, it means you sell it at 46, it's going down, you buy it again, so you can make money. So you have two things in trading, two directions. You can buy long, you can make money, If the market is going down, you can sell short and you can make money also. But I suggest you do day trading. It means you open a position, you follow it 1 hour, 2 hours, 5 hours, you make money, and then you sell. Day traders. Okay? So try to understand this. And listen, لحسن كثيرة, I am not following, I don't day trade. That's why I'm not worried about Litecoins and the other things. I don't follow. Okay? I follow only stocks in the USA market. I don't follow the other cryptocurrencies. Now, we have a few minutes, and I am sorry. I will be finishing all this stuff, and I will be finishing because when I reach 2 hours, it's the live is only 2 hours. I can't go and do more than this. Okay, so let's finish these questions. Clown Twitter account said, when you see a big company like Johnson & Johnson or Procter & Gamble goes up, means correction is coming because those companies are safe haven when the market is troubled. Listen, Clown Twitter account. There is no safe haven in the stock market. Anything can collapse. Okay? Now, let's see. I will show you something right now. Johnson & Johnson and PG okay. Now let's I show you something. So look here at Procter & Gamble in years, okay, and check this year. So Procter & Gamble Corporation goes from 59, it goes to 26. This is in 2000. So it means that you can lose half of your money in that year. Where is this thing that it is safe? Here, from this year, it was 73, it goes to 54, it goes to 43. In this year, for example, 2015, it goes from 90, it goes to 65 down. So in general, what I am saying to you, man, is that maybe if you think that these two companies are good as investment, okay, try to invest in them. Don't trade them, invest in them for the long run. If you think that these companies are good companies for investment, for making money, for competition, for dividend, for example, if you think that you can invest in them. But The problem is that when you see the past of some companies of 10 years or 20 years, and you say, Johnson & Johnson is a good company because it goes in the past. But who tells you in the future it will do the same? What if this company collapses because there are other companies that are better, offering better services, better drugs? Okay? What if? Looking at the past is good, but it is not the future. This is what I want to tell you. And when you have a conviction, when you think that this thing is good for you, you should not leave it. You should do it. You should invest in it because it is your opinion. And leave it for 5 years, 10 years, and then compare it to the other stocks. Now, if you succeed and you see that Johnson & Johnson is excellent, you have succeeded in your investment. But if you see your stock has been going down after you bought it and you lost a lot of money, it is your opinion. Okay? Because you should bet on the stock for the future. We don't bet on the past. And this is a real problem. And this was the entertainment of TV shows you. They told you, okay, this company is safe, just buy it. There is no safe thing. Ask him, if he says safe, ask him, I will buy this stock. If I make money, I will give you a percentage. But if I lose money, you share a percentage. He will never accept. Especially analysts who knows the market. Analysts are there to do entertainment. They are not to advise you what to do with your money. Okay? And they show that they know everything. If they know everything, why they don't invest themselves? You will see that investors, that analysts in TV, they all are in newspaper when you read or in websites, they always put a notice that I don't own this company and I will not buy it. You understand that? He tells you, I'm not going to risk my money in this company. And then, if you read his article, he will tell you, oh, okay, buy this company because it is good. You see, this is entertainment. I think, Clown with Twitter account, I think you are watching too much TV. And this watching too much TV will affect your decisions in buying stocks and investing. It will affect you. So, but if you decide, let's say you decide that these two companies are good. Okay? Okay. Just go and buy them and invest them for the long run. Trump said, why do you tell us that the market is troubled when the trouble ends? I did tell you the market is strong for 7 weeks. You were here. Go to my 7 weeks each Friday. I say the market is strong. The market is strong. Each week. Go and you have the proof. Trump, I think that you are not following us. I think you follow 1 week and then you sleep the other week. So, in order to give you the thing is that 7 weeks from 26 December, I have showed you in many weeks ago. Each week I show that the market is so strong. All my subscribers, all the people who follow me, they have bought stocks and they have made money in these 7 weeks. Okay? In YouTube, I try to say you it's strong. Now, it's up to you to find stocks and buy. But if you are just sleeping, waiting until someone tells you, oh, you should buy today. No. This is not the case. So when I say the trouble ends, it doesn't mean that we don't have another trouble. I say the market's strong now. It could be strong in the future also. But I don't say the market will never go down again. I always tell you, you should be careful. Put stop loss. If something wrong, exit the trade. You don't stay in another downtrend. And this is how we make our money. It's just we follow stocks when there is a trend. If there is no trend, we exit. As simple as that. This is, you should follow the instructions, follow how do we trade. Okay? Ugandan Knuckles, thank you very much. Frontiers man, hi Karim, how are you? Frontiers man, you come late, but thank you very much for coming. We are 7 minutes more than 2 hours, so I should end this session soon. Always said, how can we find to which index a stock belongs? Oh, how do you find a stock which index belongs? It's very easy. I will show you this and then we stop. Okay. Let's go to this. Procter & Gamble. Consumer non-durables, this is the sector. Personal products is the industry. So, PG is into an industry called personal products. Now, let's give you the example from the chart from the index. So, this is called consumer non-durables. So, you should go here to, you go down to consumer non-durables. Okay. Look here on the left side, consumer non-durables, this is the sector. If you want to see Procter & Gamble into the industry, you should go to personal products. This one, and you click that. Okay, you find here on the white Procter & Gamble. The industry is called personal products. You click that. So this is the industry. This is a yearly thing. So let's go to the daily. Yes. Okay. So this is the industry, personal products, and this is Procter & Gamble. Consumer non-durables is the sector. The industry is called personal products. You can take any example. Let's say we take Facebook. Facebook is internet information provider, is the industry. Internet is the sector. Okay? Now, let's say Twitter. Twitter is the same category, the same industry, the same sector as Facebook. Okay? Now, let's say Snapchat. Snapchat is not shown the industry and sector because it is an IPO. It's a new stock. Okay, a new stock. It has a gap app. I have made a video about the gap app. Okay, now, and all these companies here are in the same personal thing, personal products. All you can check which is good, which is bad. Okay. Which is good, which is bad of these things. Now, What about the index? No, the index, we have two indexes. Personal products is the index for the industry. Index, it is just what you want the index. Is it the broader index or is it the tighter index? If you are looking for the index for the industry, it's called personal product. This is the industry index. How do you find it? You just click here, Morningstar 324. This is the index, what it is doing. It's called personal products. This is the index of the industry. Okay? So the index, we have two indexes. Consumer non-durables, this is a sector index. Personal products is the industry index. Okay? So thank you very much. Oh, okay, you got it. Now, if you, it's very easy. If you have training level 3, you can go. I try to show you what is the index, what is the stock, and how can you do it manually. You search manually by yourself, and you don't use the stock screener that we are using. Okay? So this is the thing how we do it. Okay, so we are in 2 hours 13 minutes, and for me the live session should be 2 hours. Thank you very much for watching. Please hope to see you next week. Sometimes I am in twitch.tv Djellala, so you can check that in my description. Thank you very much, and see you next week. Thank you very much.